I've actually coached a lot of people, at least on the financial end, through retirement planning. And the biggest conundrum is, okay, well, how do you make your money last? Okay. And and I see where people's retirements have actually not been as fulfilling as people wanted to. They don't want to outlive their money. Okay, number one. And number two, but when are you most healthy to be able to spend your money? So the conundrum is you want to spend your money in your 50s, 60s, and 70s before you get too old. Okay. And a lot of people are not healthy enough in their 70s, 80s, and 90s, so that the money they didn't spend because they didn't want to outlive it, they have all this money now and they haven't lived the fulfilling life that they could. So with my background, obviously, in the retirement end of it, and now with starting strength, et cetera, I said, well, you can have both. You can have the livelihood financially as well as from a strength perspective, so that you can live well throughout your retirement.
Today's guest is John Kawauchi. John is on the podcast today to tell all of you old dogs with sore shoulders that you shouldn't stop training. That's a shit excuse. You can actually make things better. Surgery isn't the answer to all problems. Being big and strong is important, even if you do have injuries and orthopedic problems. So John is one of Will Morris's clients. He has a rotator cuff tear. He went through some rehabilitation with Will Morris, like most of us have. Us being the people in my direct circle. And John is one of these people that has the attitude that we like, which is, okay, I've got an injury, and that doesn't mean that I have to go sit in my ass till the day I die. I can work around it. I can make it better. The body is regenerative, and I can take advantage of that capability to my own benefit. So John, welcome to the show.
Thank you. It's great to be here.
Yeah, man. Why don't you break down for us how this all started? What was going on with your shoulder? I understand some pickleball was involved in pissing it off. Give us a summary of the problem.
Sure. Well, I've been a tennis player since my 30s, and I knew that at some point my shoulder was not feeling well, but probably like many 30-year-olds, I just played through the injury, played through the pain, et cetera. And then took some time off, moved around with the family a little bit, took up biking, et cetera. But when pickleball came around, probably about 5 or 6 years ago, I heavily got back into it. And that's when I re-aggravated the injury. And, you may know pickleball is very addictive and a very popular sport with us elderly folks. And we're playing 4 or 5 times a week. And as I am basically semi-retired, I have the time to play that. And I think I saw an article the other day about how pickleball is basically more dangerous than you think, because us retirees have all this time to go play it. So it may not be the most physically taxing, like rugby or something, but we can play it so often and probably have some sort of injury from previously where it tends to aggravate that. So basically, it got to the point where I could barely lift my arm over my shoulder. And in pickleball, you also have to use a backhand, this sort of forward motion. And that I could barely do. And that's when I knew I needed help. So I went to my traditional doctor, got x-rays, MRIs, and they put me through the regular, let's do a cortisone shot. Of course, that makes it feel better. But I also did know that that was not a permanent solution. Concurrent with all this, I'd actually, Pete Ye is actually, I've known him for about 15 years, and he had started the starting strength gym here in Columbus. And he got me hooked up with Will, who I thank profusely about getting me on a different path. And he said, okay, you're going to hear this from your traditional orthopedist, and they're going to tell you, it's all about posture, this kind of stuff. And he was right. I did try some of that stuff, the rubber bands and everything, and doing those stretching exercises. I'm not saying it didn't help, but it certainly wasn't getting me to where I need to go, which is the purpose of starting strength. And the reason I started starting strength was to get to play pickleball better, strengthen myself, my core, everything. So I needed something kind of that combined the two, and it was just probably a coincidence that everything came together.
Got it. Okay. How old are you, by the way? Because part of my racism, but you're Japanese, so you could be 45 or 65, and I can't tell.
Yeah. Well, it's funny you say that. A lot of folks think I'm in my early 50s, but I just turned 60 on the 21st.
Gotcha. Cool. Okay. And tell us about the injury. What was the diagnosis? I know I believe you got some imaging done. Tell us about the details.
Yes. Initially, I got an X-ray done, and X-rays really don't tell you a whole lot. And they said, well, okay, we need to do an MRI. And what the MRI showed was I had a 20% plus tear in the rotator cuff. But I also knew that it turned out the deltoid tendon was also bothering me, particularly as I was raising my arm. So I knew that was a little bit of an issue. And just the overall weakness, I didn't realize, because it was happening so gradually, that I basically had lost strength in my right arm, which is my dominant arm. And where it started to exhibit itself even more was when I was doing deadlift, for example, I would lose my grip on my dominant arm, which is not usually where you lose your grip. You usually use your grip on your, the non-dominant arm. And so then I knew something was going on. So that's how the symptoms kind of exhibited themselves.
Got it. Okay. And tell us about how this affected your day-to-day life, what your pain was like, and what you were and were not able to do. And then I want to talk to you about when you met Will, what you guys did together, and how you were sure that Will's efforts were the thing that were making the difference.
Sure. Well, initially, I just kind of did what I always did, pop some ibuprofen, ice it down, or sometimes use some heat. Or I had one of those electrode things where you can actually, increase the blood flow to the area. I mean, it all kind of helped, but it didn't really, it was treating the symptoms, not really treating the issue. And it got to a point where it would literally wake me up at night if I rolled over the wrong way, and, I could feel the pain.
Yeah, I think Ripito, in his simplistic brilliance, gets this just right. Where when he's talking to someone and they're trying to decide if they need surgery or not, he goes, "Can you sleep?" It's like, right. If you can't sleep, that's a problem. That needs to be fixed. And I've been in your situation with shoulder problems. I've probably had 3, let's call them moderate shoulder injuries over the years. And I was in a position where I couldn't wipe myself with that hand after the bathroom. Couldn't sleep. Could hardly move my arm. My right shoulder sits higher than my left shoulder. If I go to scratch my back, like I can't really lift my hand much above my waist when I put my arm behind my back. My shoulder is significantly compromised, but I've never had surgery. I just make sure that I can always press over 200 pounds, and that seems to do the trick. What exactly did you and Will do? How did you approach this, and what was that like?
Well, first he explained to me that we wanted to definitely add, load weight onto the shoulder, et cetera, build the muscle, also strengthen the tendon. I had never heard about strengthening tendons. Mostly people say with ligaments and stuff, tendons, like, oh yeah, it's, if it's torn or it's injured, you pretty much have to live with it and manage it. But I had not heard that you could basically, make it better. So when I basically reiterated to Will what I thought he told me was, so I want to make my 70, 80% of what's remaining in my tendon better than the 100% that it was 5 years ago or 10 years ago. He said, exactly. And I said, that makes sense, number one. Number two, that's a permanent solution. Or something that you continuously, can sustain it versus something that you just treat the symptoms, treat the pain. And I said, well, I'm up for that because I'm already committed to strengthening through starting strength other parts of my body, and why not also use starting strength to deal with this particular issue. And so when we started, what we did was we altered primarily the bench press and the well, three things we did actually. Bench press, we used we used the block where I can't lower the bar past maybe 5 inches above my chest, so that I wouldn't torque my shoulder. We also did strict press instead of the full press, shoulder press. And then we used the forgot what the bar is called, where instead of putting the barbell back on my shoulder, it's this kind of thing that I can also hold.
Safety squat bar.
And do a squat, safety squat bar. Yep. Yes. So the whole idea was to limit any torquing of my shoulder while still building strength and progressing forward.
Got it. Okay. So you're the principle here, which a lot of people are not aware of, even medical professionals aren't aware of, unfortunately, is you are a biological regenerative system, and provided you apply stress in a thoughtful way, you are able to rebuild tissue. And that applies to tendons as well. Tendons are tough because they're low blood flow, and once they're injured, they're kind of perpetually pissed off, at least off and on. It's kind of like back injuries. I've discovered that myself, especially with my elbow tendinopathy. I've had tons of issues with that, but it can be made better. So it sounds to me like you did a couple of modifications on the exercises to limit unnecessary stress on the tendons, and then started progressing forward with the stress recovery adaptation process. What were your numbers when you started, and then where were you when you got to a point where you're like, okay, this is no longer much of an issue? And then how long did that take?
Okay. So as I mentioned, I was on starting strength before I kind of said, look, I got to fix my shoulder. Yep. And at that moment, I was squatting probably 190, benching around 160, deadlifting maybe 240. And what am I missing here? Press, I was pressing maybe 120.
Got it.
Okay. And so when we started the rehab, we basically cut those numbers down at least by half. I mean, I was only pressing, 60 pounds. I was only benching maybe 100. Okay. The whole idea was to just start to get used to the limited range of motion and to build strength. The one thing I did with the bench press, for example, we did what's called a very slow bench press, as opposed to the quick down, quick up.
Like a tempo bench.
And that was tempo bench, exactly. And that was a way to load things, without, risk of injury, because of I wouldn't be doing a herky jerky type motion.
Was it touch and go on the block, or was it a pause at the bottom of the bench?
It was more of a little bit of a pause.
Good. Okay.
Okay. Or they said it could be a very, very light touch, but you don't certainly want to bounce.
Got it.
Okay.
Got it.
Yeah. And so we did that for about, it was going to be a 12-week program. So we did that for about 8 weeks, progressing in weight, maybe 2.5 pounds or 5 pounds where it made sense. And so after the end of 8 weeks, I was probably at about 80 to 90% of my max, weight, prior to the injury or prior to the rehab. Okay. And so currently, and it's been in that 8-week time frame, probably ended around May. And so I've been out of that 8-week rehab for now at least a couple months, 2 or 3 months now. And so currently I'm almost setting PRs, every other day. I only go now 2 times a week, but I did, in fact, I went today. I'm doing like 130 on the press, 210 on the bench, and 220 on the squat. And deadlift, I actually, hit the 3 cookies here, did the 315. So
not bad for an old dog, man. Well done.
I know. That's the biggest thing. I'm like, well, my son and wife actually do starting strength. So My goal was to be, my son is going to be passing me shortly, but I had to hit the 300 and 315 on the deadlift before he did. So,
Nice, nice. Are you all training over at Pete's Gym in Columbus?
yes,
Oh, cool.
yes,
So Starting Strength Columbus, owned by PEA. Solid guy. Sounds like he's got a kick-ass community down there. And then how did you guys
he
meet?
does.
Were you buds before he opened the gym, or did you guys meet through the gym?
Well, I had worked at Nationwide back in 2000 and starting in about 2007, 2008, I believe. And he was just a youngster back then. And there was this sort of corporate mentor program. And I was hooked up with Pete, and we've just stayed in touch ever since then and enjoyed each other's companies. We played racquetball and squash and all sorts of stuff, pickleball now. And so I've just known him for, about 15, 16 years.
Gotcha. Okay.
And he actually said, "Oh, you gotta check out this thing called Starting Strength." And only as a favor to him, I said, "Okay, I'll check it out." And once he explained what it was, then I was hooked because I'm looking for sustainable solutions, not just your latest, fad diet, so to speak.
Correct. Yeah, yeah, yeah. And I know Pete's a finance guy. I'm assuming you're in the finance world as well. So you all
Yeah,
have a
yeah,
penchant for things with numerical qualities, things you can track and measure, right?
yes, return on investment, so to speak.
Mm-hmm.
And we want to invest in things, that sort of mentality. Nothing happens overnight, and you have to invest your time and effort into something. And we actually use a lot of investment type metaphors. This is your strength 401k, so to speak.
Yeah, yeah.
So
Yeah, and I've heard it described as even better than a 401k because not only are you accruing it for later use, but you get to use it while you're accruing it.
mhm.
Um,
Yeah, what I was going to mention is so when I was in the corporate world, my specialty was kind of retirement planning. And where I think is especially applicable is, I've actually coached a lot of people, at least on the financial end, through retirement planning. And the biggest conundrum is, okay, well, how do you make your money last? Okay. And I see where people's retirements have actually not been as fulfilling as people wanted to. They don't want to outlive their money. Okay, number one. And number two, but when are you most healthy to be able to spend your money? So the conundrum is you want to spend your money in your 50s, 60s, and 70s before you get too old. Okay. And a lot of people are not healthy enough in their 70s, 80s, and 90s so that the money they didn't spend because they didn't want to outlive it, they have all this money now and they haven't lived the fulfilling life that they could. So with my background, obviously in the retirement end of it, and now with Starting Strength, et cetera, I said, well, you can have both. You can have the livelihood financially as well as from a strength perspective, so that you can live well throughout your retirement.
Excellent. I love that message. Speaking of messages to send to people that might be listening and in a similar circumstance as you or similar enough for it to be relevant, what how would you describe this to them? Because you're just, let me give you some context on the question. You're in a very typical situation for us in terms of a prospective member that's a perfect fit, but you've never heard of the program. You've heard of tons of fads and you're just skeptical in general about fitness. You're aging. You know that you want to age as gracefully as possible. You know you want to have the capability to live a full life in your retirement, 70s and beyond. And you know that there are some things you can do, but even stuff that's low impact, like pickleball, still kind of tears you up. So you're sort of limited. You're like, okay, I can do some conditioning. Anything too hardcore is going to be rough on my body and my joints. I don't really know what to do. I got to do something. Got to stay fit. Got to stay active. Maybe I hike. Maybe I walk. And I can tell that the Starting Strength idea really opened your mind to the possibilities. And so, based on the insight that you gathered from the process, how would you describe this to your old self, John, the John that didn't understand this a couple years back? How would you? I'm curious about your point of view, because for some people listening, they might share this podcast with someone in your situation that needs to hear it. And our general theme here is we're trying to appeal to people just like you, people that are, middle age plus, mature, smart, successful, understand delayed gratification. And if they knew about this process, they'd certainly be interested. So just curious about your point of view.
Yeah. The biggest revelation for me has been it doesn't take that much time. And I think in the early days, in fact, I read some articles that said, well, Nautilus was probably one of the worst things that could happen, or that had happened actually to a lot of folks, because there's rows and rows of machine. And I would literally spend 3 hours in the gym going through each machine, and I didn't have, okay. And I would do all the lifts and exercises to failure. And I didn't have to do that. And so, what starting strength has taught me is, I go twice a week for an hour and a half, and I'm now lifting weights that I've never deadlifted 300 pounds. Or when I was in grad school and I was 25 years old, I could only, bench press my weight, which was 160, 165. Now, even though I'm now 175, I clearly can bench much more than 175. So I don't have to sit there and, feel the burn, so to speak. And I don't think anybody who's retired or semi-retired wants to do that.
Yeah.
Okay, I want to spend time doing other things. And so that was one of the biggest revelations, is by the correct dosing and loading of weight, you can achieve things far easier, so to speak. Although on the wall it says nothing is easy, or easy doesn't work, whatever.
Yeah, yeah.
Easy doesn't work, but
More
I'm
efficiently,
not saying
let's say.
it's exactly.
Right.
And so it's time well spent, and it's also money well spent. People are saying, well, I can go to Lifetime Fitness for $20 a month or whatever, but a lot of it is, what's the environment? You're there with other people of all ages. I was mentioning to Pete the other day, I said, what's interesting is half the members at the gym are women. Okay. And so it's not about bulking up and doing all those sorts of macho things. It's about getting stronger and improving your quality of life. In fact, my wife now does it, and she's never lifted weights or done anything since I've known her. Okay. And so she plays pickleball and wants to improve her pickleball. So she's now doing starting strength. So, and has been doing it for close to a year. We've all been doing it, my son as well, close to a year. And so it really is a sustainable lifestyle change, but without the pain of having to go to the gym for 3 hours at a time, or 3 or 4 times a week. You don't have to lift till failure, and it's actually a good time. Everyone's encouraging. It's a nice environment, and people really care about you.
That's pretty unusual in the fitness business, and just in general, anything related to your health. And anything related to a business where you're paying someone money. The amount of care and attention you get in our gyms, I think, is pretty special. It dawned on me that we're onto something different here when John Hahn, the owner of Starting Strength Memphis, called me and he said, the most fascinating part about this gym that I've opened, Ray, is not that we have all of these members and we're competing with other fitness brands and we're stealing their members. It's not that at all. We're competing with the couch. 80+% of the people in this gym would be doing nothing if not for this, because these are shrewd people that make calculated decisions, and there's not a solution out there that gives them a good enough bang for their buck, so they don't invest in it. And I like the way that you frame the kind of the investment metaphor, because I think it's spot on, and this certainly appeals to a certain type of person. And I think that the communities, as you've alluded to, that we've built in these gyms are special. So not only do you have a coach over your shoulder making sure that your technique is as perfect as possible and your program is dialed in so the stress matches your situation, but you're also surrounded by a group of like-minded people. And then a lot of members, just like yourself, include their families in training at these gyms. So we have plenty of families that train together, which I think is pretty neat. Some families train at separate times intentionally, and then other families want to train together as a group. So what's your situation? You guys all go at the same time, or how does that work?
Well, my son and I, he's 26, and he and I go Tuesdays, Thursdays now, and then my wife goes 3 times a week. She goes Tuesday, Thursdays toward the evening, and then Zach and her, they go Saturday morning. So they're doing 3 times at the moment, and I only do twice. So.
Do you know any of their stats off the top of your head? So I'd be interested in your wife's height and body weight and the progress she's made over time, if you know offhand.
Yeah, she's a little petite woman. She's about 5'1" and maybe 120 pounds. And I know that she's deadlifting right now, I think about 170. And initially started, probably below 100. I don't know her press numbers and her squat. Well, no, squat I think is up around the same as well. So, and my son, who's never done anything athletic, he actually has Asperger's, and so it's kind of tricky sometimes to get him to do things that are athletic, etc. And he's really taken a liking to things. And so just today he was squatting like 280. He's a little bigger than I am. He's around 210, 220, but still, guy who'd never, done any lifting at all. I think he benches around, about what I do, and then deadlifts catching up. He's got that 305. So fortunately, I got that 300 before he did. So
what's his height?
He's about 6 foot.
Okay. Yeah, big boy. And then do you have him on, or is he on any type of a diet? Is he eating his protein and things, like 200 plus grams of protein a day?
Yeah, we all take our protein shakes in the morning, and that's the other thing you want to mention about why it's been sustainable is we're not having to starve ourselves. I mean, we naturally are eating better and more healthy food, but we still have bacon. We still eat the foods that we like. We're just naturally a little bit more conscious not to overdo it with the sweets and whatever. But we're also very conscious to say, hey, look, if you're lifting and you need the protein. In fact, Pete had introduced us to a Korean barbecue place. It's all you can eat for lunch. So we all go there now. And they're lucky they only have a 2-hour limit, because otherwise we'd stay there for all day.
I'm a big fan.
So yeah. So that's the other thing is, I mean, when you're retired, I can imagine you want to be enjoying things, right? You don't want to say, oh my God, I got to stay to this diet so I can live till I'm 90. The whole point of retirement is to live, not to, not live.
Yes. Yes. Yeah. I think that's one thing that the fitness industry and the nutrition industry by proxy get totally wrong, which is, since they're so focused on the short term, they sell these programs that are not sustainable. That, the intensity and the frequency of the workouts are not sustainable. And even if they are physiologically, are they psychologically? Do you really want to spend that much time doing this nonsense in the gym? Or is the gym something that enables you to do something outside of the gym, like the way we approach it? Same thing with diet. Are you going to go on some crash diet where you're eating, boiled chicken and broccoli 6 times a day? Or are you going to just simply make some adjustments to your macronutrient split and dial in your total calories a little bit so that you're eating for performance, and then lo and behold, your body composition goes the direction you want it to go, and then the numbers keep going up and life gets better. So I guess what I'm trying to say is we're attempting to be the adults of the fitness industry. It's like, if you're a kid and you want to jump from fad to fad and it's all about aesthetics and it's all about the Instagram cloud or whatever, cool. That's just not what we do. But if you're an adult and you want a template for making yourself more capable, and you want a template for improving the way you eat so you can achieve the results under the bar and the results you're looking for aesthetically, it's not that complicated. It's really not that complicated, and it doesn't take that much time. I mean, you're 90 minutes twice a week. If you were in a hurry, that could be 45 minutes or an hour if you wanted it to be, right? But 90 minutes is taking your rest and having a chat and hanging out, and great. At least going to the gym is a good time, and you're around people you enjoy being around.
That's right. So yeah, I mean, even my wife, who I mentioned had never done any sort of weightlifting program ever, religiously goes. And in fact, when she, because she still has to work a little bit, and when she misses a time, she's like, goes the next day, or she makes sure that it's not, okay, well, I'll just blow it off this week. She makes it up.
Yeah.
And so it's something that people enjoy going to. So.
Outstanding. Well, Let me know if there's anything else you want to talk about that I didn't ask you about when it comes to lifting. Otherwise, I actually want to ask you a couple of finance questions. I figure while we have you, let's give some advice to the audience about how to prepare for
Sure.
retirement the way you have. So, anything I haven't asked you about lifting that you want to mention?
No, I think we pretty much covered it. A lot of it was that, and I'm kind of maybe bringing the experience of my wife and my son is, um, you know, a lot of these levels seem unattainable, and the whole starting strength method, 2.5 or 5 pounds a week, or sometimes maybe only a pound a week, will get you there. And I never thought I'd be deadlifting 300 pounds when I first started. I think I deadlifted 150 pounds initially, and it's like, wow, within a year I'm going to double that. So and wasn't slaving away in the gym. I was just making steady progress. And I see that all the time. I see it with other folks that are there, and folks that are older than me, and so I see it with my own eyes. It's not just what I've achieved by myself; it's what other people are achieving. So.
Probably a great segue into the next question, because you're essentially saying that frequent deposits of a similar denomination equals a good outcome long term. What is your big picture advice for those that want to stick around and listen to just a finance pro's point of view on how to manage your lifestyle and your cash situation? What is some big picture advice that people can follow to make sure that they are preparing correctly for retirement and their financial house is in order? And obviously I know that this definitely is varies based on the individual situation, but I'm curious if you have any thoughts on just general advice that applies to most people.
Yeah. I also have a background in what's called behavioral economics. So it kind of, why do people do the things that they do? And oftentimes it's what they do is counter to what they should be doing. I guess there's a little bit of a bleed over there with starting strength, but a lot of people like to follow the crowd, particularly in investment type things, because they want to feel safe, right? Um, and what happens, unfortunately, is when the market enters volatile periods, the crowd gets nervous. Okay. Well, what happens when the crowd gets nervous? Well, people tend to get out of the market. Okay. So, and then on the flip side, when the market's doing really well, okay, people tend to say, well, yeah, so-and-so, my barber's making money, or my hairdresser's making money. I should be in the market. So if you are always following the crowd, people tend to buy high and sell low. Okay. And so you almost got to prepare yourself to the exact opposite. And if you can do that consistently, you will do fine. And unfortunately, a lot of people think also that the market is a gambling mechanism when it's not. I've been through in my career 4 or 5 different market crashes or bear markets, et cetera. And, despite all that, I've sent, my other son to college. Zach would have gone to college had he wanted to go. And I've been able to pretty much retire early, which had been a goal of mine. So slow and steady and sustainable wins the race. And just be disciplined. It doesn't mean you can't, splurge every once in a while and do something fun. It just means that just follow that path and you'll get where you want to go. Unfortunately, most people, they read the news too much and they follow people as if there's they follow people with just opinions, okay, as opposed to having the track record and the data and the process that they've developed over time, like the starting strength process that have had, it's given results and you can see the results, okay, versus just pure opinion. There's always an opinion out there. And that's the thing that's frustrating. Just like I'm sure, strength training, there's so many opinions out there. But how do you really sift through things and get it done? And that's just really being consistent and just making progress. So.
Yep. Yeah, my take on personal finance is maximize your income. especially when you're, and I'm actually contradicting myself here because I'm not maximizing my income in my current role, but I believe this is a good long-term situation. Maximize your income, especially in your years of high productivity, you know, like build a really strong foundation of excellence and expertise in a domain, so that by the time you're in your 30s, you can just go hard and keep going hard in your 40s. Go hard for as long as you can and build wealth, because earning is the prerequisite to investing, right? And then keep your expenses as low as possible. And I like what you suggested there as far as splurging every so often, but not making that a recurring theme. And it's a lot like nutrition. You know, you can see what somebody's lifestyle and level of self-control is like by looking at their waistline, you know? So be prudent with your expenditures and make sure you're thinking about the future. When it comes to asset classes, I've got a couple of opinions to share, and I'm curious what your thoughts are. I view the market, individual stocks, as a pretty risky game. And if you want to pick individual stocks, don't do that unless you're a professional. I think doing fund investing, I think the track records are pretty clear that if you get in at the right time, you can make some steady gains over time. I think the guys over at Berkshire make that pretty evident. I think the Vanguard fund is pretty solid. I'm not a stock guy at the moment just because there's no extra cash to invest in stocks. So I invest in myself since I'm an entrepreneur. And then generally, I think investing in businesses, if you understand business and you understand how to do diligence on a business, is wise. And I think real estate is smart. If you know when to buy, if you buy at a low price with a low cost to capital, you can get into an asset that not only appreciates over time but also throws off cash flow. So I think that's kind of how I view my top 3 asset classes, if you want to call investing in yourself an asset class, and just my overall view on personal finance. Would you contradict anything I said there or add anything to it?
No, I think that's a great mindset. I think the key to what you're saying is you have to invest in things that none of those things that you mentioned are a sure thing. Okay, that's okay. If it was a sure thing, you wouldn't actually be making money. Okay, it's keeping the money in the bank, making 0.5%. Okay, and losing to inflation, of course. You have to invest in things, whether it's a business, whether it's index funds, whether that actually have an opportunity to grow. With that opportunity to grow comes volatility in the short term, but in the long term, it certainly can pay off, and usually does pay off. And so the more asset classes you have, the better, because what actually I'm kind of prognosticating here from my MBA days is it's correlation is the key. Things that are not correlated will make your portfolio safer. Okay. So when you mentioned real estate, a business, stocks, I'm a Berkshire fan. I also do things like structured notes and hedge funds and life insurance and annuities. So I have more asset classes. Now, there's always somebody who has an opinion. And I always say, well, follow the money. The person who's offering the opinion is oftentimes the person who, their hammer is always a solution for that nail. All right. Okay. And so if you follow the money and what motivates the person, that's what you got to watch out for. And what I mean by that is, I think you would agree that things that are valuable are typically not cheap, right? Why should they be cheap if they're valuable, right?
Yep, by definition.
But things that are by definition, and so there's a lot of strength advice out there, right? So things that are valuable are typically not cheap.
Yeah.
Okay, and what's the flip side? Things that are cheap are typically not valuable. So that's why I don't trust a lot of things that are on the internet. I'm not saying it's all bad. I'm just saying if you follow those rules, that will lead you in a better direction. There's nothing wrong with certain insurance products if that's what makes sense for you. There are people out there like the Dave Ramseys of the world, maybe I shouldn't be saying anyone in particular, who will say, oh, you can't do annuities. In fact, that was a conversation Pete and I had with another lifter the other day in starting strength. And I'm like, well, there's nothing inherently bad if that's what you need and that's what makes sense for you. And of course, it's going to cost money. Why shouldn't it? If it does something uh, counter to the market and is anti-correlated, and that's what you want, then you can't get that for free. You got to buy a product that does exactly what you want. And in the context of your portfolio, that may make sense. Okay. So again, free doesn't mean it's great, but there's so many people who out there who say, well, if I had invested in this and I just bought the cheapest thing, I would have done just as well. And part of me just says, well, but you didn't, did you?
Hindsight.
Okay. It's hindsight. Hindsight, and that's my financial background that says you can always slice and dice the market. Because I used to be one of those guys for my product when I managed product to say, I can always find a set of data that supports my argument.
Yeah, absolutely.
You can always do that.
Yeah, that's how the government-funded scientists do it. They do retrospective epidemiological studies. They take a data set. I'll tell you whatever you want to hear based on a data set. I can filter any which way I want to, right? By the way, your advice of not following the trend is so smart. I'm hesitant to even share this story because it makes me sound so stupid. But in my defense, I was 20 when I bought my first house. It was in Irvine, California. It was a condo, and I'd saved up, was finally making good money. The market was just on fire. This was in 2008 of all times. So I was like, well, shit, I can get an interest only loan, buy this thing. The equity's going to keep going up. I'll refinance. I had the same plan that every, stripper in Southern California had basically. And it didn't go well. It didn't go well. So I had to short sell that thing, ding my credit for 7 years, 100 grand loss. And if I just thought about it for a second, like, hold on. Things are growing real fast. They're at an all-time high. This is probably a time to sell, not to buy. I just didn't have the experience back then, but lesson learned. That one's burned into my brain for sure. And then to your point about making sure, well, I just wanted to add a point actually. So in terms of picking an investment vehicle, you stated that, there's not like you can't just call a category of investment or an asset class bad or good. It's a solution to a problem, and it depends on your situation. And my thought is any investment that you're looking to make sure that, and this goes with any important decision in life, the narrative does not matter. The narrative is bullshit. The narrative serves the purpose of the salesman. What matters are the data. What matters is the actual numbers. And you need to be able to evaluate the numbers yourself, which leads to kind of the theme, which is don't invest in something you don't understand. Because if you're dependent on somebody else understanding it for you, especially if that person isn't your blood, that is a situation where the incentives are probably not aligned. So make sure you can understand the numbers. I did want to mention a couple things too. And then I had another question for you. I just stumbled across this account called Wealthfront. I won't link to a referral link or anything. I don't benefit at all from mentioning this, but there's a Wealthfront savings account that's 4.55% APR. So if you've got some cash, and by the way, they do the ICS cash sweep distributed deposits. So if you're depositing more than 250,000 with them, they'll FDIC insure all of it. So you get a savings account at 4.55% interest, which in today's market with inflation is pretty outstanding. So I just put a bunch of cash into there. And I'm looking at speaking of my lesson that I learned from buying my first house, I'm looking at companies like NVIDIA and Tesla. So NVIDIA is the graphics card company that makes all the GPUs that powers AI. NVIDIA is a super hot stock right now, and they may be one of the most valuable companies in the world at some point. But I'm not going to buy now. I'm not going to buy now because everything's really high. Tesla is building an army of robots, and they have the most advanced AI on the planet, and they'll probably be the most valuable company on the planet. I believe Elon when he says that. But the market's frothy, and it's high, and I don't want to buy now. So I'm waiting to see if there's a correction, and just based on the commercial real estate situation and the impending apocalypse in a specific asset of office space, and all those loans that are likely to become defunct and go and default, I believe that there will be a massive correction. So this is, for my uneducated, outsider perspective, I don't believe this is the time to be buying stocks. I'd love your reaction to that if you have any thoughts to share. And then I also wanted to ask you for your thoughts on, just as a final question to wrap up, your thoughts on life insurance generally, because I've got a couple of thoughts and I'm on the market for it, and just curious what you think.
Right. Well, in fact, it's interesting you bring up those two stocks because I actually own them.
Right.
Okay. And when something is on fire, I think your instincts are good to say, okay, you don't want to chase something that you know probably has to cool off a little bit.
Yep.
Okay. I don't really have a great answer to that, only to say that you always keep a little powder dry, okay, particularly in these volatile times. And even though we've had a first good half of the year, we know it's bound to cool off a little bit. Okay. So the corollary to all this is when something does take a big dip, don't be afraid to buy. That goes to the contrarian aspect, right? Okay, when no one else is buying, it's exactly when you want to buy. And that's counter to your issue with your real estate that you bought when everybody was buying, right? Okay, case in point, back in 2009, when the market took a really big dip, right, because of the banking crisis, et cetera, you had mentioned Berkshire. I actually, for my wife, bought a huge amount of Berkshire, okay? Berkshire Class B was selling at about $65 a share back then. And of course, I had more at stake than just the money. It was my relationship with my wife. But so you don't want to mess up those sorts. That's right. So, and you may know that Berkshire Class B right now is $330 a share. So I've like, you know, and doesn't mean I haven't made mistakes. Everybody makes mistakes. Okay. But it just goes to show you that it really is, you know, not following the crowd, using your brain, so to speak, but willing to commit to something you know is inherently right.
Yep.
When a good quality company is slammed for no other reason than the market is in a bad place, you got to be buying. Okay. There was a time when NVIDIA was down, I believe, about a year ago, right? And that's when I bought some. Okay. Right. So, you know, it doesn't mean you always have to buy a lot. Okay. But buy some. Yep. Okay. Berkshire actually knew I should buy a lot because with Warren Buffett running the thing, I said,
it's hard to go wrong.
Yeah. Unless this whole country goes to, you know,
then we have bigger problems
here. Then we got bigger problems. But I know that, hey, this is the time to buy Berkshire. It is on sale, and I'd be a fool not to buy it.
Yeah. That's solid, and I think that's a Warren Buffett maxim as well. It's like if the market is a reflection of the emotional state of the people buying stock, and that does not change the business fundamentals. So if there's a reaction in the market that causes the stock to be cheap, but the business fundamentals are sound, that's a buying opportunity. So yeah, right. Don't follow the crowd and do exactly the opposite of what idiots like Jim Cramer say, and you'll probably be in pretty good shape.
Right. So you had a question on life insurance.
Yeah, let's wrap there. This is a little bit self-serving, but man, this is one of these areas where the salesman that stands between you and the product you want to buy is the thing that prevents you from taking action because they're so uninterested in your actual situation and creating a solution that is ideal for you instead of ideal for the commission check. So I know two people that are my age that have either died themselves or have had a family member die. And this is in the last 18 months, and I've had to lean on life insurance. And, you know, I've got a baby at home now and I've got a wife, and I'm just thinking to myself, I'm a risk taker. I've got a bunch of chips on the table, and who knows what's going to happen tomorrow. Right. So, I think there's term life insurance, and then what's the other one? Term and.
Well, there's a class called permanent, which includes like whole life insurance or universal life insurance, et cetera. But there is this thing called whole life, which I actually have a policy, which is whole life.
Gotcha. Okay. So whole life is the type of deal, if I'm not mistaken, where you're basically, you're purchasing term insurance, but you're also kind of investing into an account that compounds. It's like, it's almost like two assets in one. And I might be totally butchering this. I'm completely new to this asset class. So maybe better if I just ask you, can you break down the differences between life insurance and any general advice you have for someone looking to purchase something?
Yeah. Okay. Well, as you probably already know, there's really what's called term, which is temporary, and then there's what's called permanent. Okay. Term is a form of temporary. You're only being insured for a certain period. Okay. And usually when you're young, your odds of dying are very small. So that's why you can get it very cheaply. Okay. But what happens is that if you don't die, well, you basically get nothing for your money. Okay. That's okay if that's what you want. Okay. On the permanent side, there's whole life, and then there's, let's say, universal life. What you mentioned is really called universal life, where what they're doing is there's an investment account and there is a term life policy joined together, so that you have to put money in the investment account side, and as it kicks off earnings, it's paying the premium for the term policy. Okay, so that's how it works. Now, what PEA and I own actually is called whole life. That's another form that's different from what you described, where we are owners through our policy of the company. Okay, so our life insurance company, where I bought my whole life policy, I am a part owner of that company. So as that company does well, I get my portion of proceeds from that. Okay, and there are certain contractual guarantees. The death benefit, as long as you're paying your premium, the death benefit goes up and the cash value goes up. Okay, now it's a very, very long-term investment. Okay, I've been contributing to one for 15 years. Okay, but it's now to the point where it has enough cash value to where the dividends that are thrown off will pay for the annual premium. So that's what's called an offset. So for example, I will no longer have to pay additional premium unless I want to. Now, I may want to because it's also an investment that's really a bond portfolio. So I look at it as my bond portfolio that just happens to have a death benefit connected to it.
Interesting.
Okay.
Interesting.
And so here's the kicker. Now, even though from a cash flow perspective, it is more expensive than a term policy by magnitudes. Okay, I will get every penny I put into it back. Either whether I can access it in various ways before I die or when I die.
Yeah.
Now people will say, well, why do I need the money when I die? But I have a son who has Asperger's, and I have to probably set up a special needs trust, or you may have other reasons to want to leave a bequest to your heirs, et cetera. So, but the key there is I'm getting every penny I put into it back at a rate of return. Okay. And the rate of return will probably end up being 4%.
Damn.
Okay. Now, it takes a very long time for this to happen. But the other kicker is, okay, you mentioned the bank account that offers 4%. Well, guess what? Every year, you've got to what? Pay taxes on that, right?
Yeah.
Okay. When that death benefit kicks in on my policy, it's tax-free to my heirs. Okay. So, and I can use that for all sorts of things. For example, long-term care. If I ever run into problems and I have to, ask my kids to help me out, which they probably won't, but they're going to get paid back from the life insurance policy. Or if I die before my spouse does, she's basically won the lottery.
Yeah.
Okay.
Right. Yeah. That's why you got to treat her well.
And so there's all these. So it's not just a return that matters. It's the timing of the return, yep. Right? And so that you remember I talked about correlation earlier. So you want to probably have some assets that are not correlated with the rest of your assets. Mm-hmm. And so that's the reason I buy that, is because it will pay off when, it needs to. That's when I die. Okay. Well, what happens if I don't die? It's still by itself, from a pure investment perspective, pretty good for how conservative it is, and the tax issue. And also, everyone I ask, well, do you think taxes are going up or think they're going down? If you think they're going up, well, then you want to put some of your assets in something that's very much tax advantaged.
Very interesting, man. I love this podcast. So I tend to learn something new every time.
Yeah. If you want to chat, after on this, I can. It isn't for everyone, but if you have any interest in it, I can go through the whole 9 yards.
I would love it, actually, if you wouldn't mind. If I could bother you to send me a link to something I can read, and then I'll hit you back with sometimes we can talk, I would appreciate it. Yeah, definitely.
Sure.
Cool. All right. Well, we're at about an hour, John. Thank you for sharing your story, for taking the time with us today. Thank you for educating me and hopefully a few others on some important long-term planning stuff beyond just strength, but for the financial side of your life as well. And that's kind of the theme of today's episode, which is, hey, you only get one life. It's on a strict timeline. There's not much you can do to adjust that. But what you can do is optimize your experience, just in general with your financial health and in your physical and psychological life with how you handle your body and your nutrition. So, John, you're clearly a sober-minded, thoughtful guy, and yeah, thanks for being a member at Starting Strength Columbus with your family, and for contributing and for enjoying what we're offering here. And that's the kind of deal where it works out great for everyone. So much appreciated.
Well, yeah, I enjoyed it and chatting with you, and thanks for the invite. So.
All right. Thanks, John.